Good morning, traders. It's 8 a.m. Chicago time on Thursday, the 22nd of October, 2015. Thanks for joining me as always. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. Let me start off by saying on your screen, if you're not showing this image in full screen, you want to hit the full screen button on the bottom right corner and set it to 1080p so you can see the numbers clearly. The news overnight mainly revolves around the UK retail sales number, basically blasted through expectations. It came out at around 3:30 Central, 4:30 Eastern, 1.7 versus 0.4. Year on year, 5.9 versus 4.7, very strong number. The ECB came out at 6:30 this morning and announced that it's leaving its 7-day refi rate unchanged at 0.05% as expected. ECB's Draghi is still in his conference. The conference started at 7:30, just about a half hour ago. The main points that ECB's Draghi is announcing: degree of accommodation will need to be re-examined in December. So that puts the focus on the ECB meeting in December. Reiterates decline in inflation mostly reflects lower oil prices. Inflation has not picked up as they had expected after all this QE, and that's likely to drive the bank to do something else or to do more to push that along. Initial jobless claims came out a half hour ago at 259,000 versus 265,000. Continuing claims 2.17 versus 2.19. Other than that, looking ahead today at the calendar, we just got our FHFA house price index expecting 0.5, came in at 0.3%. We're looking for consumer confidence in Europe at 9 o'clock, just a half hour after the open, 9 Central, 10 Eastern, negative 7.4. At the same time, we're looking for leading index, looking for 0 on that. The consensus is 0. And existing home sales also at 9 o'clock Central, expecting 5.39 million. And then at 9:30, we're looking for EIA natural gas storage, expecting 90 on that. Other than that, as far as speakers are concerned, the only real speaker left here is the BOE, Bank of England's Bailey, at 2:30 p.m. Not expecting anything out of that. After the market, we're looking for AT&T to announce. Expectation is 69 cents. Amazon, 87 cents. And Google, or Alphabet, expecting $7.24, and Microsoft 59 cents. Those are all big movers. So the picture, the technical picture here, let's switch over. Yesterday, very, very interesting break yesterday. Let's look at what was expected. Overall, the expectation on the open was for it to open actually somewhere in range in value. It ended up rising a little bit before the open. It opened out of value in range. The expectation was for a test of this prior day's high. Looked for a test up, and then the key targets mentioned in Hypo 1 was for a rotation up initially to take out the prior day's high, and then we were likely to move down into the 2024, and then from there bounce up and move down to 2020, and then that's basically what Hypo 1 was. It's all I was looking for. The targets down at 24 and 21, 2020. And then the extended target from a few days ago, if you recall, was 2007 being the MC point of control, which is way down here. To me, that was a long shot, given that the market's been completely imbalanced and choppy. Yet some interesting interesting plays yesterday. Um, we were able to I narrated it in the chat room. This trade right here, the pullback to the mid, almost perfect execution there against the 2026 opening swing low. You can see the opening swing low right there. The first appearance of buyers sets in the opening swing low. A pullback there. We had lots of liquidity in this area, and we were looking for a rotation down and a test of this double bottom. Where do I get the double bottom from? Here's 1850 in the morning yesterday, and then the day before, that was the low right here in this mess of numbers. Actually, I think a feature has been added in IRT that allows me to hit shift negative and boom, clean that up, right? Um, oh, that didn't last very long. In any event, we ended up making a higher low, pushing through the mid, back into the opening swing. Could not take out the opening print here. This this dotted green line. A crazy compression here that took place that ended up resolving to the downside. There was just a ton of trading that happened here. You could see the high volume node that was created from it. Just it was very strange watching this happen. It just seemed like algos going crazy in there. And then it resolved itself to the downside, breaking the prior day's low and the double bottom, which is what I'm looking for. There's a high probability of a double bottom breaking on the next session, and a high probability of it breaking intra-session as well. And it finally broke lower. And after the pullback, we did manage to get down to 2008 and a quarter, missing the 2007 MC point of control by 5 ticks or so. The overnight session extended the selling, which is what's expected here. When we close so close to the extreme of one day of the day, essentially what we have is it running out of time, and it generally continues into the overnight session. And we got that, but only by 3 ticks. Again, we missed the 2007. I want to show you something that's really important here. Why that 29 to 31 area was key. So if I move this composite up to its next most important date, which was when we put in the 2117 high, if I switch that over and we look at what the action has been since that high was put in, you'll see that the 2030 area is a key composite low volume node. So here's the balance that we've had earlier in the year. The cutoff point is where we got to. It's around the 2031, 2030 area right here, right? And then when we look below, we see that, okay, so, but beneath there, we have multiple distributions here. We've got multiple distributions with the heaviest distribution being at that 1922.75, which is a key area from this entire crazy balance zone that we put in after the August sell-off. And we've basically walked the market up since then until yesterday. This is a very important area, and I've talked about it a fair amount. We also carry it over from the sell-off day from August 21st, and essentially we pushed up against it, we compressed against it, we could not take it, and yesterday we had some of the longs cover their positions, liquidate some of their positions on that drop. I don't expect that to last. I expect that this is likely to continue. There's a clear channel that we're trading in right now. I expect, based on the ECB announcement, the announcement out of the UK, very bullish stuff going on there. I expect that today will likely be a an inside day. I expect us to trade inside of the biggest chunk of yesterday's trading. Really, there's not much to move us out of the way with a wide range yesterday. Yesterday went from 2008 to 2031, and so there's 23 points, plenty of range for today to work with. I don't see it moving out of this area with the MC point of control. Here's that 2007. 2007 carried forward as the MC point of control, and it is basically the low of last night. So we've been delimited by the the low volume node, the composite low volume node, or area, long-term area of rejection at the 2031, 2030 area, and then we're also delimited by the 2007 point of control below. There's incentive for both sides to act here, rejection above, and we have a major test below. Once we get back into, if we start to walk down today, if we start to walk down towards yesterday's close, then we expect the 2007 to be taken out, for it to drift down to 2000, 2001 area, and then deflect back and then be stuck here, given the magnetism of the 2007, the high volume area. High volume areas act as areas of attraction because they represent value. I know that's a lot to digest here real quick, but the primary hypo today, if we look at last night's action, you can see that it's basically non-existent on the edges, high kurtosis in the middle, non-existent on the edges. I mean, it's just, there's just no volume below the value area from last night. I expect the market to be attracted back in there to this high volume area, and I expect it to get stuck here today unless there's news. I just don't see us pushing one way or another too much today. So it's important to just chill out. Again, orange flag on the racetrack, get off the throttle, be ready to maneuver if need be, and just mind your risk. It's just really important to know, when to slow down, when to push the gas. And this is, for the last couple weeks, it's been a good time for day traders to just back off the accelerator a little bit and make calculated moves, because there's just a lot of obstacles on the track, just to play with that analogy. Looking around, so that's the primary hypo, looking for it to flutter on the open. There's two-way interest on the open today, most likely, and then I expect it to drag down, but I do expect it to play around in here. The overnight high is more vulnerable than the overnight low, so the expectation is it's probably going to do this today as a primary hypo. Let's take a quick sweep and look at what the other markets have done. You can see here on the Euro stocks, very strong push off of the ECB announcement, closing the naked point of control at 33.14. This market has been pretty well balanced for quite some time. It's just been in a box for quite a few days now, and it's resolving itself to the upside and is closing this very old point of control. But other than that, this market's likely to revert to the scene of the crime. I expect this to flow down into where the move started from, back into this 3282, 3285 area. We'll watch for that today. That's what I'm looking for. I'll leave you with that. There's a lot to cover here. Stage 5 traders, don't forget, webinar today at noon. Webinar today at noon. We'll do our pop quiz live in front of everyone, and I'll see you there. Thanks, everybody else. Thanks for tuning in. I'll catch you tomorrow. Take care.